Everyone has a plan until they get punched in the face. Yeah, that's a Mike Tyson quote, and I think it fits pretty well today. We spend so much of our time analyzing global market fundamentals, economic trends, but we're also very aware of sentiment influences that come into play in certain market environments. Today we're going to touch on sentiment. We know that markets can be highly irrational in the short term, and sentiment can swing dramatically. Now may be one of those times when market participants are displaying irrational behavior and sentiment is really weak as a result. Right now we believe we're in a market that is pricing in a lot of bad news. Market participants are digesting troublesome inflation data, reacting to the Federal Reserve's more hawkish policy tone. Moreover, equity markets historically do not do well in the month of September, and September in the year 2022 has been filled with negative sentiment and poor market returns, obviously. The way markets are reacting, you would think that the Fed is just going to keep on raising rates, and simultaneously, inflation is not going to dissipate. In short, we believe the markets have got this wrong. In our view, inflation has already begun to dissipate, and we expect it to continue to fall further in the months ahead. Oil saw its peak months ago. We're seeing new and used car prices continue to drop. It's hard to imagine the rise in interest rates won't have an impact on home prices if nothing else. This, we believe, will take some pressure off the Fed, and that could take some pressure off of risk-based asset prices. We have seen volatile periods like this too many times before. As a matter of fact, in looking at some of the key sentiment gauges that we track, the market has not seen this much pessimism in the last 10 to 12 years. I'll say that again. Some sentiment gauges we follow have not displayed this much pessimism in the last 10 to 12 years. The reality is the market has historically performed extremely well shortly following periods of weak sentiment, such as the one we find ourselves in today. What's the message here? In a time of peaking pessimism and some irrational fear in the marketplace, now is not the time to abandon your investment approach. The portfolio killer is not the presence of volatility, but how you react to it. Thanks, as always, for watching. You know where to find us.